Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap and look ahead. So this morning we woke up, or we came in, and futures were down, 8, 9, 10 handles, not knowing exactly how the markets would respond to what happened over the weekend. You had a lot of marches, a lot of chaos, not chaos. You had just a lot of rhetoric back and forth after President Trump put the immigration ban on. You had lots of remarks from tech companies back, to their employees. Just had a lot of unknowns. So when that happens, you have to let the market do a little price discovery. And there were a few things that happened, which maybe gave the sellers a little bit of control. But at this point, you have some bigger trends that are still intact. So it's one of those spots where we need to wait and see. And it all depends on your time frame on how you want to handle it. Whether you trade actively for cash flow, which you might have reduced risk today, whether you're an intermediate trend follower where you don't really trade that often, but you want to be involved if trends are still intact, or macro, which is obviously 401k, 529, 403b, all those. So for today, this was the first time, to me, because I was in, I think I was in 5 positions, but I've been in like 6, 7 positions pretty much since the post-election move started, that you had no really way out. Unless you bought the entire day all the way into the 1030 low and sat, which was definitely hard to do if you're an active trader. So for me, I got stopped out of a lot of my positions in the first 15 to 30 minutes, and then I waited to see some pivots develop. I did trade a little bit thereafter, but I didn't really do much. So let's just go right to the chart of the S&P cash. So, let's talk about the patterns here real quickly. So, I'm not even going to go all the way back here. Let's just go to this is when we cleared the descending channel here. This is when we took back the 8 and 21 day, and basically the rally was born post-election. This commitment to this move above the trend line is what helped give us conviction to get in portfolio approach. So if you want to draw an active trend line, this is the active trend line, meaning, basically we've been holding above it during the past, since November. We came in, briefly went below it, and came back above it. Okay, so this trend from igniting above when we started down 20 handles and went green is still intact. What we're going to have to figure out, what does this mean, is you do have a potential island top. What's an island top? You have 3 days of upside action where you gapped above it, so that trapped a lot of the shorts, and then people wound up flipping to get along for more upside, and then you gap below it, and pretty much either trapped some of those momentum longs or stopped them out, because usually you get a move like that, you have to reduce risk like I did. So all in all, you look a little closer up, and we're still, in this trend. It's just a little bit more vulnerable. We saw that actually, that some people, even including me, that try and give the benefit of the doubt, our patience is getting tested a little bit. So with that said, here's your new pivot. This is 2268. Above the 21-day for now, below the 8-day, above the 21-day, above the 50-day, and we'll see what happens if this gap remains unfilled, meaning like tomorrow, we open down 4 handles and then, we don't rally much, that basically raises the odds that maybe this gets broken, and those of you who are looking for a short trade to the 50-day, could get that. And by the time maybe that happens, because you have Fed on Wednesday, or you have the last day of the month tomorrow, and the new funds is 50-day.
Good afternoon, everybody.
Here, which will be interesting to see how that transpires. So for right now, you have 2286. That's the high of the day. You have the low of the day. We'll see. Do we stay inside this for a few sessions and then roll down, or was that it? We open up, fill this gap, and then we grind higher and we look at the action in other spots. So with that said, I like to figure out kind of what's on the stronger side, what's on the weaker side. So real quickly, go through some sectors. On the weaker side, you have the small caps. Why is it on the weaker side? Because when the S&P and the Dow made all-time highs, again, this did not. So for now, it's still on the weaker side, but it did hold this congestion here. So for now, IWM 133.24 is the pivot to trade against. I guess it can get out of harm's way. If all of a sudden tomorrow the IWM gets above 135.24 and holds above it, maybe that'll give some clues that we hold, and then you just draw this range out a little bit further. But if all of a sudden tomorrow there's no real bounce here, stays within this candle and rolls down, that would give us some clues that there could be more downside. You look at the banks, FAS, still a little stronger than the small caps, because it didn't even make it down to the 50-day where the IWM went through it, but still in the range. Made a nominal little high here, but we'll see what happens here come Fed Day. We'll see if the Fed is hawkish or not on Wednesday. They're not supposed to do anything in March. I mean, now they might point to March if they say they're going to raise in March or sooner, and the banks respond well. It'll be hard for the market to get that much downside. So we'll see. Right now it's smack in the middle, not very compelling, but off the lows. XLE has been weaker. Why is XLE weaker? Because look at that, XLE is below the 21-day here, below the 50-day. So still, it tried to break above this little descending trend line here and then came back below it on Friday, and still just it's weaker. Look, the stock market made new all-time highs. Last week, did oil make new all-time highs or XLE? Not oil, but oil stocks? No, made a lower high. So this is still considered a weaker sector, so this is a bit of a headwind versus a tailwind, and all you know now is the low here, which is 72.36. So now let's talk about high beta names which we trade and manage, because I came in with a few of them. So on Thursday, Google came out with earnings, and it was not a blockbuster. Okay, it was a good number, but not enough for a stock that just made a move to all-time highs, 30 points or so. But they gave you a way out on Thursday, whether you had the call spread like me, you were able to sell those 840s and buy back some of the 870s or hold whatever, or even trade. Pushed through a pivot and came back below. We talk about pivots. That's the rubber match spot. And if you look at Google, Google went through that 861. Oh, what did Red Dog say was the pivot? Why was this the pivot? Because this was your line in the sand. Above this, strong. Above this, failure. Get out of the way. And did an outside day. And some of you guys went home short. If you did so, congratulations. Okay? This is what you call a breakout failure. This is something you don't want to see in the overall market. This was powerful. Now earnings are also out of the way, so shorts aren't scared about an earnings report. But anyway, it just came into support. We'll see what happens tomorrow. You have 821.03 is what you know. That is your, the what's it called, the pivot here to trade around, and then you have the 50-day, which is down here. In my humble opinion, I think at some point it hits the 50-day. So this is now in the weaker camp, maybe short on rallies, etc., until it gets to here. Not a lot of juice. Plus, they're talking about scrutiny with antitrust, et cetera, So this outside day should have got you away from Google long, and some of you might have got short. And now we'll see if this level holds for a little bit or not. Maybe we get an H sell setup for those of you who want to short, or a Red Dog reversal. We'll see. But I'm not going to overtrade Google. I got stopped out of my Amazon stock, but I'm still in my options. Okay, was very tough today. I thought I did well. I got out, right around this. Actually a little bit higher, this 829 area, which was Friday's low, because I was super active, and it did go all the way down to 816. So at this point, I'm kind of happy. I'm not happy that I lost money, but kind of happy that it stayed in the game. What do I mean by staying in the game? It's still above the 8-day, still above the 21-day, and there's still the potential of a blockbuster earnings report, which I do think can happen. Bears are pointing to a double top, and you know what? If they're inline earnings, chances are it's going to get crushed. That's why we have options, not the stock. If they blow it out and do a stock split, which I think there's a small chance of that happening, then the options are going to make a lot of money. We might even be able to trade it after hours if it takes out this pivot of 843 to 847, because everyone's short against it. We'll have to cover, and Amazon has done a whole lot of nothing for for a lot of time since October, like 4 or 5 months. So we'll see if the next day or so it holds in here, and then we'll see what happens on Thursday. But there's still an earnings report to happen, so shorts still need to be worried. Not like Google that it could float around. Before then, we have Facebook. Facebook, what did it do today? Held the 8-day moving average. A lot of guys started getting long and reclaimed all the moving averages here, and then you had a nice little bull flag there. And now, it held the 8-day. It was very extended from it, right in front of the old high, and we talked about reducing in front of the old high. At this point, maybe it holds another day. I am not going to have any kind of option strategy going into earnings. We'll see. It's going to have to be a heck of a report to get above this and stay above this. So we shall see. You still have another day or two. Actually, it's Wednesday for it to, now you have your price discovery to see if it consolidates here and builds a platform for maybe an after-hours trade or not. Apple is actually tomorrow. I'm sorry. Still, all said and done, okay, still above the 21-day and the trend here. It's still above the accelerated trend of 8-day, and it actually was buyable today. I didn't touch it, but came off lows. We've had lots of nice trades here in Apple, this year and last year, especially when, it took back this spot right there, and then the Red Dog reversal, which I'm going to go over in the webinar tonight, right there, and then it took this out. But for now, it's still hangs in there. So as I go through some of these charts, you know, not a lot of things aren't broken. They've bent a little bit, they shook things around, but we shall see. The question is, if we do take another leg to the downside, some of these things could be vulnerable, so we're going to see which way wins. Some of you guys were asking me about BABA today. I didn't buy any options, but you know what? It just pulled back to the 8-day, which was extended from, had strong earnings. We'll see if this gap gets protected. Maybe tomorrow you buy versus spot since it already had discovery, or maybe, you know, gets above today's high tomorrow and it goes, you know, or gets better. You know, last time, you know, we had this type of pattern here, was a nice big move. We bought the pull in here. I do remember that pretty well. And then we added when it broke this little flag type pattern, and then you had a move. So perhaps that happens again. We shall see. But this is in the stronger camp. What else is in the stronger camp? Netflix, to me, is in the stronger camp. Why is it in the stronger camp? Because look at that. Oh, wow, what a quinky dink. The 8-day held again. I was long it overnight. I unfortunately got stopped out just because I was losing too much money, and now we'll see if it goes sideways and there's a trade above this. Tesla, we got actually out very well, you know, while it was green, just to be safe because everything else was coming in. At this point, you know, this too still looks really good. Why is it really good? Look at the move that it had, you know, from the descending channel here. And all it is still above the 8-day, well above the 21-day. It's not broken yet, except for, the question is, it's not saying it's going to be broken. You know, this accelerated trend could change. If all of a sudden the market went and took another discount, this could still hit the 21-day. So as an active trader, you don't want to sit for 10, 12 points. So you want to make sure that today's low holds. What's today's low? 247. So this, to me, is still in the game, you know, and it also has earnings that has to come out. But earnings I'm a little worried about, but we'll see if they buy bad news if that hits. I think they're buying really the relationship in the future of the infrastructure, and you know, I think it's even more than the cars now. It's more of like, you know, are they going to hire Elon Musk to build out the new infrastructure with new technology versus the old school? But anyway, I still love it. I still think at some point in 2017 this gets taken out, but I didn't think we would get 50 points before the first month is over. So you just want to make sure that it's not too far too fast. And I think that's what a lot of people are wrestling with. You know, is it too far too fast? Can upper levels hold? Upper levels have held since the election, and now we're trying to figure out if they can continue, or do we get a bit more downside action? So as an active trader, today, if you took off some risk like I did and you got a little beat up, it happens. If you traded out of it and bought the whole way down and, you know, and got a great average cost, you did better than I did. You know, that's a difficult thing to do, because who knows, if we didn't bounce today, you know, all of a sudden that could have been a big time potent engulfing bar with an island top, and could have meant more downside that you would have to hold your nose and go underwater with. So we'll see what happens. Again, at this point, I still think, you know, short term, a little bit more careful, clean up a few things, maybe have options because risk is premium paid, kind of like I do. Today we have new pivots. We have today's low to trade against tomorrow, depending on how we open. If we open down, maybe we buy versus it. If we open up, maybe there's a rally to short since we're so off today's lows. I think there's going to be enough trades to happen to figure out, you know, what's next versus placing big bets. A lot of people are like, I'm getting short, I'm done, I'm staying short. I was like, okay, stay short versus last week's high. If it breaks that, you're out. That's a thesis. If, you know, same way, oh, I'm buying this dip. You know, I'm like, okay, well, it could be a little quick to buy the dip, considering it's really the first down move of the year, and usually a potent down move could lead to more. So for me, I'm going to be flexible. I'm going to try and play both ways. I have a little less conviction to the buy side, but maybe over time, if we prove to hold, that could change and we can go back to portfolio approach. But for now, I'd rather be safe. Have a good night. Hopefully I'll see you at the webinar tonight at 5 o'clock. If not, the morning call will be at 8 o'clock tomorrow. Bye-bye.